I think Asia is the future. With it come certain responsibilities that are key to overall human success. With it, obviously, is the nature of what we're going to do with the environment. There's a question of where society is going to move forward. And I think Asia is going to become key in handling those issues in the future.
In the past, the USA had a tendency to be a leading culture in the Western world. Who knows? Maybe in the future, a shift of power towards Asia will make China take over that position from the USA.
Even though China's economy will keep growing and so will its influence in the near future, I think in 20 years China will not be as powerful as it is today due to the rise of other economies such as India, Indonesia, Brazil and Nigeria. Although undoubtedly China will be among the most powerful countries, there will be many more countries whose interests China will have to reckon with.
My major concerns about the shift in power are mostly that us as a Western society aren't very educated and we don't really know a lot about the norms and the culture in, for example, China. And I believe that we don't really know what such a shift in power might have as an implication for us.
Good morning, everyone. I'm Li Xing, and welcome to this session. Well, the stories about innovation and the new innovative power of China hit the paper every day. I will cite you a few numbers. Half of the world's AI unicorns are Chinese. The online payment in China now amount to about 19 trillion US dollar, while its GDP is 13 trillion US dollar. And the world's fastest supercomputer with 10.65 million CPU core is in a center in a southeast city that no one has ever heard of. Well, it's called Wuxi, by the way. And China has the world's first aerial passenger drone, etc., etc. But when we talk about China, there is often a yes, but moment. Yes, a lot of patents, but are they really useful? Yes, China is innovating, but how much of that is indigenous and how much of that is borrowed overseas? And yes, China benefited tremendously from getting into, incorporated into the world system, but how much China is giving back, and how much of a role the state is playing, the private sector is playing, and also the startup, especially the capital, is playing in that. So with that, we're very fortunate to have a super capable panel today to discuss this and all the truth and myths about China's innovative power and the role of the capital. I will quickly introduce our panelists and we'll get directly into the discussion. So sitting right next to me is Freeman Shen, the founder and CEO of WIMA, WM Motor, an electric car startup. WM is a German name.
Yep, after the word Weidmeister.
Weidmeister, yes.
I'll tell you the story later. Yep.
All right. And then the lady in the middle, she gave an insight session already yesterday at Gallen. Ms. Freya Beamish, Chief China Economist of Pantheon Macroeconomics. And last but not least, the gentleman on the far left side is Piyush Gupta, CEO of DBS Group, headquartered in Singapore. So let's get right started. I want to have a quick round with our panelists that what is China truly? Do you believe China is truly an innovator today? And if yes, what's behind it? If no, what's lacking? Start with Freeman, probably?
Oh, yeah, definitely. I truly believe, if China is not a truly innovator, there's no company called WM Motors. Yeah, when I found the company, believe it or not, I talked to many of my friends in US. I live in US over 12 years. And a lot of my friends in Europe, I spent over 50% of my time in Europe for over 7.5 years. Most of my friends think I'm crazy because create a electric company, electric car company. Look in Tesla, 15 years now, still losing a lot of money and still trying to survive. But when I talk to the friends in China, most of them think, yes, there's so many new technology coming, there's so many possibility coming, and why not? The company name is called Weidmeister because I named the company actually on the other side of the river, on the other side of the Lake Constance. I have a very close German friend. He was a very senior executive in Volkswagen. I truly believe on the engine car, on the ICE, we call internal combustion engine world, the German is world championship. But electric vehicles, who knows, right? When I named the company, I think we want to become one of the largest electrical car company in the world, we got to be named that in German language because we need to let our German friend know that. So I call the company Weidmeister. Unfortunately, they don't allow me to register that word. So I have to pick the two words, WM Motors. It stands for Weidmeister.
All right.
So to your question, yes, we believe China is the true innovator. I already deliver thousands of my car on the road. It's very different, a lot of new technology. Without the innovative spirit there, I don't think the company will even survive.
All right. So you're a living example of the innovation power in China. Freya, what's your view?
Well, hopefully I can talk about this from the macro perspective. Absolutely, China is an innovator already, and it will continue to be an innovator. Japan has done it before China, Korea has done it before China, and the economic model is quite similar. So what we see in China is that there's this huge flow of savings out of income in each period, and that has to go somewhere. It can be sent abroad in the form of exports, but in terms of the investment domestically, a massive flow of savings is conducive, of course, to is a driver of fast investment growth, and that helps in pushing out the technology frontier. So yes, China will be at is already towards that frontier and will continue to be at that frontier. But Japan, if we take Japan as a good precedent, what we saw over the course of the last 20 years was that Japan failed to tackle its debt problem. And over that period, it did continue to be productive, but the branding of the goods and the types of goods that were being produced were not those that were desirable. So there was a time when if I wanted an electronic product, I would buy, if I wanted a music player, I would buy a Sony. Now I have a Japanese car, but I don't have a Japanese anything else. And that's a huge shift. It's not necessarily about just the quantity of goods that a country is able to churn out as a result of the investments that it makes. It's about that creative spark. And at this stage, as an economist, I almost feel the knee-jerk reaction to apologize because I'm talking about something that's not immediately quantifiable, but prefacing anything with an apology is probably a destruction of human capital, so I'm not going to go down that path. Instead, what I want to say is that the overall social and political environment, I think, matters in terms of the creative process, reminiscent of the comments that Professor Linda Hill was making yesterday and what some people of the International Student Committee have been saying about friction and how from friction you get new ideas. And if there's a very closed down political system, then you end up having you end up closing down that political system further down the chain or in the business realm as well. So that's my but and my couple of concerns in terms of China's innovative process.
All right. So also pay attention to the culture and the institutions. Piyush, what's your view?
Well, I'm going to make it 3 for 3. You can see how innovative he was in naming his company. It tells you there's a lot of creativity in China. I think if you ask me, is China inventive? Is there a lot of new invention in China? I think that is yet to be. To your point, China is the second largest filer of all patents today. But that doesn't mean there's a lot of invention going on, but even that is changing. So the number of engineers and the number of fundamental foundational research happening in China today is extraordinary. But in terms of innovation, bringing products and solutions to market, new ways of doing things, leapfrogging, and finding fundamental different solutions to problems, there's no doubt in my mind in the last decade, there's been no country which has been as prolific in innovation and ideation as China has. It's true, you talked about drones, 70% of the world's drone market share is with DJ. The biggest challenge between the US and China today is not trade, it is 5G, IoT, and Huawei. And the fact that the US and the whole world is worried about Huawei just tells you about how innovative and how forward-looking Huawei has been. The biggest sales of smartphones today, Xiaomi, Vivo, are Chinese phones, and they're not cheap. It's not just because they're cheap, it's because they're really super phones. The smartphones have all the capabilities and all the features that you get on Apple at a fraction of the price. So industry after industry can find that the Chinese are beginning to bring solutions to the market which are differentiated. In our own industry, I have to tell you, we run the largest bank in Southeast Asia. We are fairly advanced and sophisticated digitally. I worry a lot more about Alibaba, WeChat, Ping An, China Merchant than I do about Apple or Google or JP Morgan. And that just tells you the nature of the capacity of the Chinese financial sector and what they've done and transformed is just in a different league.
Perfect for setting the stage, and we'll come back to a lot of the points we just mentioned. But let's take the grander view, the macro view first. How is Chinese economy doing? And in terms of the innovation and the capital for powering the innovation, when the economy is doing well and when the economy is not doing so well, where we'll find the engines? Freya, please.
It would be remiss of me to plow ahead without giving a kind of a base case as to what I think, whether there'll be a trade deal in the immediate future. Perhaps you can tell by my attire that I am dressed for the death of the international trading system. But and Piyush was asking me about this when we were behind the stage. He asked me, why did you take off your somber black high heels, which are appropriate for the situation, and put on your sparkly gold trainers? It was a moment of rebellion and of dissent. And perhaps if I can offer a ray of hope through my foot attire, it's to say that I think that there is potentially in the short run some narrow path back towards a trade deal being reached. I won't go into the great detail of why that might be the case in the short run, and I certainly have grave misgivings over the trajectory over the long term, because I think the structure of the Chinese economy is not going to change, and those issues that Martin Wolf was addressing as to the legitimate concerns of the US over certain Chinese practices and the structure of the Chinese economy, that's going to be with us for a time. But in the short run, my ray of hope is the weakness of the Chinese economy, to come back to your point. So I give you a hope and then I knock it down again. And the weakness of the Chinese economy, I think in the first quarter, markets got a little bit ahead of themselves. The data is very thin in the first quarter because of Chinese New Year. There's not that much data that's actually published, so markets move a lot on survey data and data that's very distorted. And at the particular moment in time, liquidity conditions are intensely tight, and that means that you get these kind of big moves and sell-offs, and people read a lot into bad news. What we've seen in the first quarter is that there started to be a little bit of a loosening of liquidity conditions, and markets have sort of taken that and run with it. But in terms of how weak the Chinese economy is at the moment, we have our own indicators of real GDP growth, and that shows that growth is much weaker than the authorities, the official data suggest. And that really is a result, partly, yes, of the tariff hikes that were undertaken last year, but also of the tightness of liquidity conditions and the de-risking and deleveraging campaign that's gone on since midway through 2016. So in terms of where we're going from here, one of my favorite leading indicators is M1 growth, which is currency in circulation and demand deposits. And that tends to lead GDP growth by about three quarters, about 9 months. So that peaked on a 3-month annualized basis halfway through 2016 above 20%, and at the end of last year was negative. So that tells you how strong the policy tightening has been, and gives you an impression of how weak the economy is at the moment. And amid those tight liquidity conditions, tariffs hurt even more. But the stimulus that has been undertaken since last year, or since early last year, should be enough to give us a rebound in the second half, as long as we don't deteriorate into out-and-out trade war. To give you a bit of context, just if I can finish on this side of things, the stimulus that has been undertaken last year in terms of the monetary policy, conventional monetary policy side of things, is about half the size that was undertaken in 2015-2016. And the fiscal policy side of things is about 3/4 the size if you include all of the off-balance sheet side of things as well. The recovery in 2017 was very strong, So even if we do have a smaller stimulus, that means there's enough room for a recovery. We should also note that the transmission mechanism, both of fiscal policy and of monetary policy, has changed, and that means that the lags are longer and that there's less of a response from the economy. But we're still, if out-and-out trade war is avoided, still reasonably confident that we should see a recovery in the second half. If trade war is not avoided, then all bets are off.
Well, let's ask actually the player in the market. Freeman, do you worry about the trade war? Is that affecting you?
Well, yeah, yes and no, but I don't think we should talk the details because we don't have any friend from US on the stage. It's not fair, right? Only the China voice. But the overall car market has been extremely slow this year. You know, out of the total consumption in China, about 10% is from over 10% from the car buying. You know, real estate it's not considered as purchasing. It's more investment. The overall car purchasing has been very slow first quarter this year. However, the good news is for electric vehicles, we're still growing very quickly. Probably the growing curve is not as aggressive as what we wanted, but still going. And I think the government will find a way. The more tension between the trade, I believe the government will do more things to booming the local economy and encourage people to consume and buy. And obviously, car would be the #1 target. On the other hand, there's a stage China switch from Euro 5 to Euro 6 for the environmental purpose, which will help the consumer buying a more good quality, especially electric vehicles. So we think the second half would be, I agree with Freya, the second half would be much more better than the first half of the year.
So the answer to trade war, actually domestic answer, would be beefing up the domestic consumption with more supportive measures. And also, Freya mentioned about the liquidity and the deleveraging campaign as a big factor in slowing down the economy. Do you agree, Piyush? And do you think it's necessary?
Well, yes, I agree. Actually, I'm going to focus on the shoes, Freya, or maybe even your hair, so the two ends. I think there's some bright lights. I think there's no question that China macroeconomy is slow. And I think the data points Freya talked about are true, but you've got to put it in context. Number one, I think China is very successfully shifting its economic model from a manufacturing, export-driven economic model to one more geared towards domestic consumption. You look at the share of services in the GDP and the share of consumption in the GDP, the trend lines are very clear. And that speaks well for a long-term structural shift. I think the relative share of exports in China's GDP has been coming off. And within that, even though the US is a big trading partner, the relative share of the US in China's exports has also been coming off. I think that's important to recognize. I do think, as you know, we talk to people on the ground, the first round of tariffs, interestingly, did not result in a massive shift in supply chains out of China for one very simple reason. Those supply chains are very sticky and the alternatives are very few. So if you want to manufacture a refrigerator, maybe you can, but if you want to manage and manufacture an Apple phone, it's not easy to find those component parts anywhere else. And to recreate the supply chain for the electronics sector is a 2 to 4 year activity. It's not an overnight kind of activity. So by and large, what the commentators reflect is true. What happens when you put tariffs on this, the US consumer winds up paying. To some extent, there's a margin squeeze in the suppliers and some intermediaries, but by and large, the US consumer winds up paying. Interestingly, many of our clients, when you speak to them, say, what happens in the medium term? Do you shift supply chains out of China? I think the answer is perhaps yes, at least the incremental marginal investment people are wary about putting into China, but a lot of it actually goes into the region. So Vietnam, Thailand, Malaysia, Indonesia, even India are likely beneficiaries of that shift of the supply chain. Now, in some ways, that's not unhelpful to China because China's participation in intra-Asia trade has continued to rise dramatically. And therefore, if you think about intra-Asia trade, people in the earlier session said trade is not growing. Well, intra-Asia trade is growing. We see that in our own trade finance book at the bank. It's grown 10x in the last 10 years, in the last decade. So I think there's some opportunity from that. To your specific question, I think the third big silver lining is this. I think the Chinese presidency and the administration have been very focused on recognizing the weakness in the system, which is excess leverage and too much debt and overcapacity in some industries. And so they've been very focused on trying to squeeze out that capacity and squeeze out excess liquidity in the system. People say, is there a risk of systemic debt crisis in China? I don't think there's a systemic risk today, but there's certainly a lot of idiosyncratic risk. There were 150 bond defaults last year, about $20 billion of bond defaults, and the pace of default this year is only increasing. Therefore, the focus on deleveraging, tightening, squeezing is deliberate. And it is to try and cure the ills of the Chinese financial system. And frankly, that's not a bad thing. For several years, everybody has asked the Chinese to do that, and so they are trying to do that. The truth, though, is that in a controlled economy and a controlled political system, the train doesn't go one way. You have to calibrate. So you take 2 steps forward, you take 1 step back. In the last 2 or 3 quarters, particularly because of the tensions with the US, they've eased off on the liquidity. They've pushed some more liquidity to the markets. They've created some more stimulus. But at the same time, they're still letting some of the weaker companies default in parallel. So I think it is required. I think it is a good thing. And I think as they continue to open up the markets and financial markets liberalization, you will see more of this.
You mentioned that part of the effort is dealing with the weakness in the system, especially the debt crisis. Many of that actually concentrated on the state-owned institutions or the state-owned companies or bought by the local governments as well. That's actually another topic I want to zoom in. How do you compare the state-owned sector and the private sector? I will use some numbers and share with you all that just to have a measurement of how vibrant the private sector is as opposed to the state-owned sector. So the private sector use 40% of the resources in China, contribute to 50% of the tax, 60% of GDP, 80% of employment, and 90% of new employment. So where is the state? What's the next step for the state enterprise reform, Piyush?
Well, I think when you talk about the state sector, you still got to unbundle it into 2. One is the local and municipal government agendas, and a large part of the debt, including the projects that have been done in the local municipal governments. A lot of the bond issuances, the off-balance sheet and shadow banking, all goes into that sector. Then secondly, you have the state-owned enterprises, the SOEs, as you call them. And there are a lot of weaknesses in that sector as well. But I would argue that there's some parts of that sector which are not as bad as the municipal and local government sector itself is. In the SOE sector, again, there's a lot of overcapacity. Steel is, was a challenge. Shipbuilding was a challenge. So there are a lot of sectors, parts of the sector which are obviously not in very good shape. But there are some companies which are very good. So you can't color everything with a single brush. You take China Merchants. There are 3, it's a big group. It's $120 billion. They make about $20 billion of profits. They've got 3 big business lines. They do toll roads, 10,000 kilometers across the country. They use Internet of Things, sensor technology, an integrated road system. It is cutting edge. They make ships. They launched last year the world's first large container carrier with sails. So it's a completely green ship. They also launched the first intelligent ship in the world for ores. They're in the financial services sector. They've got a whole healthcare ecosystem. They've got a public services ecosystem, which is cutting edge. It's all digitized. It links the bank into the government, so they're very good. Sinochem is another great example. It's an agriculture chemicals company, the second largest in the world. And both the offline and online capabilities to work with farmers is actually very good. So whether it's soil, whether it's plantation types, whether it is efficiency system, they bring technology, they bring research centers, they've filed over 200 patents. So everybody's not equally bad. Nevertheless, there's large parts of the state-owned sector, as you know, which is overcapacity, there are too many people employed, and they need to change. Now, can it be done? Zhu Rongji took a stab at this 20 years ago, and in the late 90s. And when he did, he let a lot of people go, he let a lot of jobs go to fundamentally try and restructure and reform the state-owned enterprise sector. I think today it's actually even more likely that you could do it than 20 years ago, because the employment problem is less of a problem for China today than it used to be, simply because of the demographics. So there are fewer people coming into the workforce, it's an aging workforce, so the job loss situation is actually not as difficult as it used to be. So it requires some will, but I think the administration has the will to try and do it. This is why they're doing it, except you don't do it. I think they're really worried about Russia. They don't want to create a Russia situation where you throw the baby out with the bathwater. So they're trying to do it in a calibrated way. You retain social stability while you try to create some degree of a reform. So it's a slow process. It's not something that satisfies people like us looking outside in, including in our own sector. But I think it's a deliberate process.
I'll quickly ask Freeman and come to Freya. Do you compete with state players, and do you feel they have unfair advantages?
Oh yeah, we have the different kind of mixing relationship with the state-owned company. You know, we compete with them. Some of our suppliers state-owned company. Some of our franchise network is also state-owned. I never worked for a state-owned company myself, but I have no problem because most of company we work with, they are very market-driven. You know, I agree what Piyush said. Probably 20 years ago, 10 years ago, the state-owned company purpose would be hiring a lot of people, but now they're different. I think they also had, I know they have also very clear KPI driven for the profitabilities. So as long as they are very market-driven type of company, we compete with them, we work with them, and we are quite glad that some of the state-owned company as our supplier, financially they are very strong, and the team has been working in the market for so many years, so they have a lot of market-driven mindset helping us. As a matter of fact, the competition we are facing, not the state-owned company, it's more multinationals when they come into China. Chinese market, at least for automotive, is too open. It's very open. Probably the most open market in the world, if you're talking about the car industry, right? We have all the brands, we have all the technology, we have all the company in China. So we compete with them.
And Freya, how do you see the reform of Chinese sector?
If I can kind of segue into that by picking up on one point that Piyush was making about how exports have fallen as a share of GDP, and trying to drill down into why that is and how that relates to the debt problem. As I see it, the renminbi became overvalued in around 2012, and if you look at it on a relative labor costs basis. And it's that has curtailed China's ability to continue growing by grabbing market share, and also has helped to bring down exports as a percentage of GDP. But nothing really changed in terms of the underlying drivers of the Chinese economy and the propensity of the Chinese economy to continue saving a very large percentage of the overall income in each period. And if you have a large flow of savings and you can't send it abroad in the form of exports, you can't find a willing borrower in the rest of the world, you have to internalize that process of saving. That process, there has to be a deficit internally to match the surpluses that arise from the flow of savings. So this is where we see the massive kink up in Chinese debt as a percentage of GDP in 2011, and that's around when I think the renminbi went into overvaluation territory. And more recently, we've started to see Chinese companies trying to deleverage, partly thanks to the official efforts to push that deleveraging. But the history shows us that once that deleveraging process begins, it's very hard to reverse it, that corporations have sort of reached their pain threshold, and politically there's been a shift from the old guard polluting over-indebted firms towards the new Made in China 2025 firms. On our calculations, the amount of debt that is still in that over-indebted sector, and that sector that has relied too much on debt previously, the way I think about it is evergreening. The outflow of interest payments compared with the operating cash flow, and if you can't finance your interest payments from operating cash flow, then that means that you must be relying on new capital to pay your interest on previous loans. That amounts to about 13 to 26% of GDP on our calculations. Now, how that figures into the innovation story is that if China chooses to write off enough of those debts, then I think we can release the capital that is held in those firms that are evergreening their debt, and that can flow to the new technology companies, and that will help to improve productivity. But if China chooses to keep write-offs low and to sweat off that debt by running financial surpluses, that's the Japanese model, and that ends up really basically in a government deficit that that really stunts growth and productivity over a much longer period.
Thank you. We have to be very careful about the time. That's fascinating discussion. So I'll open up the floor to take questions from the audience. But before we do that, I was told we can do a survey here. So the question is China the new champion of capitalism? Take out your phone and vote yes or no. A is yes, B is no. Is China the new champion of capitalism? And should we see the result now or later?
You have to wait a little bit, right?
Yeah, we'll wait a little bit, but now I think we can start taking questions from the floor. And please raise your hand and quickly identify yourself. The gentleman in the middle. Yes.
Yes, thank you very much. I'm Peter. I'm very much not an economist. So yesterday we talked a lot about purpose, and my question is, what is the purpose driving the economic policy of China, and how does that impact the rest of the world?
Who want to take that question first?
Shall I go? I think one way that we can encapsulate that in quite a short period of time, seeing as we're strained, is to recognize that China has been a country that is very much focused on GDP targeting. And that was in the local government, how you progressed up the career chain. If you hit your GDP targets or exceeded your GDP targets, almost regardless of the environmental or the cost in terms of bad debt, you moved up the value-added chain. You moved up the career ladder. Now what we see is that there's a much greater focus on environmental targets. And this is visible in the data that we look at, the real GDP estimates that we look at, in terms of targeting of PM 2.5 concentrations, for instance, and the production shutdowns that are necessary to hit those concentrations. So it's a shift in terms of moving from just solely focusing on that narrow national accounts GDP targeting towards the environmental targeting. Whether they'll be successful or not is a bigger question, but in the last couple of years it certainly has made an impact in the data.
At a different level. I have to say that the Chinese government, like every other government, is focused on increased prosperity for its people. And the truth is that they've done an extraordinary job. Between 1981 and 2012, the 500 million people who were lifted out of poverty, extreme poverty, in that one country alone. More than any other country in the history of civilization, they were able to make a shift in 4 short decades. Now, that is the agenda of the Chinese government. How do you continue to create prosperity? They want to make sure that they get rich before they get old. So they're really trying to increase the pace because they recognize the demographic challenge they have. So they're trying to increase the pace of economic development so they don't get caught in the middle income trap and continue to drive that prosperity for the citizens. The big shift in the last 2-3 years has been what Freya said. I think 3 years ago, it was growth at any cost. I think today, they're beginning to realize that there are other consequences and they're looking at a more balanced kind of growth. So President Shen has been quite clear, quality of growth relative to quantity of growth, which is why letting the GDP targets fall, but trying to make sure that you have greater environmental and other considerations in the quality of growth is now very clearly state policy.
And Freeman.
Yeah, I think I agree with the previous. When I returned to China, my previous employer said, although you speak Chinese, you grew up, I left China when I was 21 years old, but you don't know China because, we spend most of the time in tier 1 cities. If you go down to the tier 2, tier 4, tier 5 cities, the local government is really, their first priority on the agenda is trying to make people live better, out of their poverties. The biggest issue with China, I'm not sure if you have ever been to the tier 4, tier 5 cities. The gap is huge. If you go to Shanghai, Beijing, it's not the typical part of the. So the gap used to be huge. I think the most part of the local government was working really aggressively to make the gap smaller. And then you have, the media probably will report a lot of the small problems, but I would say 90% of the village leader, the township leader, their first priority is trying to make their people living better, make more money, and then as long as it's not out of range, they encourage you to do the business, and as long as you hire people and make them living better. So I would say that GDP is just one of the KPI. But on the other hand, the most of the leadership at the local government level are trying to very hard to make their people live better. So when they get promoted, they are very proud that I was head of certain tier 4 city. I make the people live better.
Yeah, so prosperity, and also prosperity with more meaning in that. And the gentleman over there? We have a short period of time, so I would like to take probably 3 questions in total, and then we can answer them together. Yes, please.
I'm Sudhir from India. As we know, the question was, is China the champion of capitalism? And here we have some panelists saying we are now trying to reduce the difference between the rich and the poor. So is it heading back to socialism? And in that case, will it reduce the growth?
Well, can I say first?
Can we take 3 questions? Because we have only 3 minutes left.
Because
so
I have a strong feeling for that question. It really depends where you live. Where's your experience? You know, I spend a lot of time in the US, and then I spend a lot of time in Sweden. And then it's all comparable. You know, how you compare. You know, if you had only US experience, you probably say, not really, US. And, but if you spend a lot of time in Sweden, you say, yeah, China probably more capitalism than Sweden. So it really depends on your experience, and it's all comparable. And that's my little giveaway for that.
So the gentleman over there.
I'm also Modi from India. This is to Mr. W.W. Motors. I'm the automotive business. We're doing electric mobiles in India with Toyota and Isuzu. Do you think you Chinese will beat us much more? And when the mobility comes, what will happen to the petroleum companies in the Middle East? Will they go bankrupt? What will happen to those economies?
Is that for me also? Sorry.
I guess it's for you. But let's take one last question, probably from the gentleman over there, and then we'll have the answers and quickly wrap up. Yes, yes please. Yeah.
Hi, this is Andre from Hong Kong. So I think that the question is for everyone on the stage. So how do you see the, especially return need of Chinese overseas back to China? How would you think the influence of the overseas Chinese back to China will influence the policies and economic policy, and also the capital management in China itself?
Okay, talent question. So yes, quickly have a round of answers on the panel.
Can I respond to the first question about is China moving back to socialism to tackle these problems of inequality? For me, it's not so much a dichotomy between socialism and capitalism. And incidentally, I think China is absolutely not the capitalist champion, just for the record. No, absolutely not.
No, he go with the 64%.
This is up. No, it's definitely not. An ex-colleague of mine, a mentor of mine, used to describe Japan, but the same applies to China as not capitalism with beauty spots, but communism with warts. It's not a very flattering description, and it's perhaps not a fair characterization, but it's not capitalism. In terms of whether they have to move back towards something that might be defined as socialism to deal with these inequalities, I think the inequalities that have to be addressed are about imbalanced income flows between the household sector and the corporate sector. Yes, the household sector saves a lot, and that's because of uncertainty and the hukou system and a whole host of reasons why they might have a high savings rate. But the underlying income flowing to the household sector in the first place is deficient as a percentage of the overall economy, and that's really about financial repression. It's also about getting the returns of capital from the corporate sector out into the household sector where they can actually be spent, and that's the major difference between the Chinese economy structure and the structure of the US. We don't have time, but I want to just say one more thing on that point. As to whether inequality is purely solved by more socialist ways of looking at things, and that certainly plays a role in terms of the role of the welfare state. But a lot of inequality going forward, not just in China, is going to be generated by rent-seeking behavior, and particularly the economic rents that are derived by but derived from network effects. As networks build and the role of networks become much more important, and the flows from that will go to disproportionately some sector of society. That, to my mind, is definitely not a capitalist system either. So this is the whole idea of it only just being a socialist answers is perhaps not quite right.
Yes, Piyush, quickly.
Well, Deng Xiaoping famously said, it doesn't matter what color the cat is as long as it catches mice. And I think that's relevant in the context of this question, because is China capitalistic? Well, if you go by Professor Ferguson's definition, private ownership of capital, that's not only not true today, it's not going to be. They're quite clear they're going to have the state be a very active participant. I personally don't think it's necessarily a bad idea. I come from Singapore, where that model has worked quite well. Are you leaving allocation of capital to market forces? Well, not exactly. That's why you have all this ineffective and inefficient allocation of capital to overcapacity industries. So they're not quite there yet. Do you have free market access and liberalization? Well, no, not exactly, because they still have a lot of limitations for market access and market controls and so on. So you can argue it's certainly not a capitalistic society. On the other hand, all the gains that China has made in the last 10, 15 years, they are private sector propelled. And there's a lot of money in China, there's a lot of venture capital money in China, there's a lot of private equity in China, and there's a lot of talent in China. So to your question, there are about 2 million and change Chinese students who are back in the country with strong STEM degrees, good research backgrounds, and many of them are driving some cutting-edge work in many of the leading companies in China. If you go to Shenzhen today, or you walk into the office of Huawei, it's just actually quite impressive, the quality of talent and the kind of work they're doing. So they are bringing talent in. And so if that is the definition of capitalism, do you have good talent, do you have money, can money be put to work, can you create productive enterprise? Well, then you'd argue they are capitalistic. So it doesn't matter what label you give them. The fact is they're being quite effective.
Thank you. And Freeman, you have last word.
It's time's up.
Time is up, but people like you, like the talent.
Talking about India, I spent quite a few time in India. We used to work
Just
for
very
Tata.
quickly, though.
Mr. Tata, Mahindra. I think India, it's already one of the largest countries for producing the small compact car, and it will continue to grow up as long as the infrastructure getting the right direction, I think. But on the other hand, I think India is still quite focused on the ICE, internal combustion engine vehicles. Middle East, there's quite a few big investors in the Middle East start concerning about the future of the oil, and they start making big investment in the electric vehicle sectors now. So I think that's a right direction as a hedging strategy, right?
Thank you. Our time is up. The discussion just got started. So please join me in thanking all our participants and speakers on the stage, and those of you with the good questions. Thank you. Fantastic.